Welcome back, Brain Builders, to Podcast Infinity. Give your brain a dose, grow smarter. Today, we're diving deep into something you probably use all the time, but let's be honest, might not fully understand. Credit cards. And make sure you can follow along with all the juicy details. Check out the episode description for links to all the sources we're using today.
It's true, most people just swipe without a second thought. But what's fascinating is how much goes on behind the scenes with these cards and how that can really impact your finances, even if you think you're using them responsibly.
Okay, so let's paint a picture here. Imagine a young family in India. A father is in his 30s. He's got a wife and a little 3-year-old daughter. They seem like any other family, right? But this father is carrying almost $100,000 in credit card debt. He feels completely trapped. There's pressure from the banks. And sadly, he ends up attempting to take his own life and his daughter's by jumping from a rooftop.
This story, while extreme, unfortunately it isn't unique. Millions of people around the world, even right here in the US, are struggling with debt, and credit cards often play a significant role.
So we really need to unpack this. How do credit cards really work? Because clearly there's more to it than just swiping for that new pair of shoes or ordering takeout.
Exactly, and to understand how things can go wrong, let's look at the Wells Fargo scandal back in 2016. Employees at this huge bank, under pressure to meet crazy sales targets, ended up opening 1.5 million unauthorized bank accounts and issuing 565,000 credit cards, all without their customers' knowledge or consent.
Wait, they were just creating accounts out of thin air.
Essentially, yes.
Right.
They even went as far as forging signatures and charging fees on those fake accounts right away. Wells Fargo ended up paying $185 million in fines. And it really showed how profit can sometimes be prioritized over customer well-being.
Wow, that's scary. So before we dive into how credit cards can trip us up, let's make sure we're all on the same page about the different types of bank cards out there. We've got credit cards, debit cards, and prepaid cards. What are the key differences?
You got it. The main difference is how they access money. With a credit card, you're borrowing money that you'll need to pay back. A debit card uses funds directly from your bank account, so it's your own money you're spending. And a prepaid card is like a gift card. It's not linked to a bank account and only has a certain amount of money preloaded onto it.
Okay, that makes sense. And of those three, credit cards are the ones that can really get people into trouble if they're not careful, right?
Absolutely. Credit cards are the most profitable for banks because they're essentially lending you money and then charging you interest on the amount you borrow. And here's where things get tricky. The fee structure of credit cards is often intentionally complex.
Okay, so let's break down these fees because I think this is where a lot of people, myself included, start to get lost. What are the main types of fees we need to be aware of?
Well, first you have interchange fees, which are charged every time you swipe your card. This is a small percentage of the transaction that goes to the banks and payment networks involved.
So even before we start talking about interest or anything else, there's already a fee being taken out just for using the card. That's right. Then you have service fees for things like issuing the card, having a secondary card holder, using an ATM, converting currency, even increasing your credit limit.
It seems like they can charge a fee for just about anything.
And don't forget about penalty fees, which are usually the biggest ones to watch out for. These come into play if you miss a payment or go over your credit limit.
Okay, so we've got all these fees, but then there's also interest, right?
Exactly. And to understand how interest works, we need to think about how credit itself works. When you use a credit card, you're essentially spending future income. You're borrowing money with the promise to pay it back later.
Right, so it's not free money, even though it can feel like it when you swipe the card. Exactly. The bank gives you a grace period, usually around a month, to pay back what you borrowed without being charged interest. But if you don't pay it all back within that grace period, that's when interest kicks in. And those interest rates can be pretty high, especially if you have a lower credit score.
So it's really important to understand how that grace period works and make sure you're paying off your balance in full every month if you want to avoid those interest charges, right?
Absolutely. And this is where that minimum payment trap can come in. Banks often encourage you to just pay the minimum amount due, which might be tempting because it's a smaller amount.
Yeah, it can feel like you're keeping up, even if you're not paying off the entire balance.
Right, but here's the catch. Making only the minimum payment means you'll be in debt for much longer. and you'll end up paying way more in interest over time.
So those seemingly small minimum payments can actually end up costing you a lot more in the long run.
Exactly. It's like a slow burn that benefits the bank, not you.
Yeah. This is all starting to make a lot more sense now. But there's more to the story, right? It's not just about the fees and interest rates. Banks also use a whole bunch of psychological tactics to encourage us to spend more with credit cards.
You're right. There's a whole psychology behind credit card spending that most people aren't even aware of. And these tactics, they can be incredibly effective because they tap into our cognitive biases and make spending with credit cards feel almost effortless.
Okay, so what are some examples of these sneaky tactics?
Well, one common one is those tempting introductory interest rates, often called teaser rates, the ones that are super low, sometimes even 0% for a limited time.
Yeah, those definitely catch my eye.
They're designed to, right? It feels like a great deal, but it's a way to lure you in. You start spending more freely because you think you're getting this amazing rate, but then once that introductory period ends, the regular interest rate kicks in, and it's usually much higher.
So you're hooked. And suddenly you're stuck with a higher interest rate and potentially a bigger balance than you planned for.
Exactly. Another tactic is all about those rewards programs, which, let's be honest, can be pretty tempting. They highlight the points you accumulate, the cash back, the travel miles, all designed to make you feel like you're gaining something.
I have to admit, I do love a good rewards program.
We all do. But the problem is, those rewards can distract you from the reality of what you're actually spending. It's easy to get caught up in the game of earning points and forget about the actual cost of the purchases.
Right. The rewards become meaningless if you're racking up debt to get them.
Exactly. Then there's something called short-sightedness and optimism bias. Basically, many people focus on the immediate benefits of using credit cards, like those low introductory rates or the rewards, without thinking about the long-term consequences.
So they assume they'll always be able to pay off the balance on time and avoid those high-interest charges.
Right. But life happens. Unexpected expenses pop up, and suddenly that credit card balance isn't so manageable anymore.
It's like those late fees. They seem small, but they can add up really quickly if you're not careful.
And another psychological factor at play is the liquidity illusion. Having a credit card with a high credit limit can make you feel wealthier than you actually are. It creates this illusion of having more money available to spend.
I can definitely see how that happens. It's like having that safety net, even if it's not real money.
Exactly. And all of these factors combined contribute to something researchers call the pain of paying.
Pain of paying. That sounds interesting. What's that all about?
Well, think about it this way. When you pay with cash, you physically hand over your money. You see it leaving your wallet, and it triggers this sense of loss. That makes you more hesitant to spend, more aware of the value of what you're buying.
But with a credit card, it's just a quick swipe. It feels almost abstract, like you're not really spending money.
Exactly. And there's a fascinating study from 2001 by Drazen Prelek and Duncan Semester that found people are willing to spend up to twice as much with credit cards compared to cash.
Wow. Twice as much. That's a huge difference.
It is. And it all comes back to that pain of paying concept. Credit cards remove that immediate pain, making it easier to overspend without even realizing it.
So what can we do about this? How do we avoid falling into these psychological traps?
Well, one simple but effective strategy is to always leave home without it.
Meaning, leave the credit card behind and just carry cash or a debit card.
Exactly. It forces you to think more carefully about your spending because you're limited to the amount of money you have on hand.
That's a great idea. It's like a built-in spending control mechanism.
Right. It's about breaking free from that cycle of swiping and becoming more mindful of your financial decisions.
Okay, so we've talked a lot about the downsides of credit cards, but I know there are some benefits too, right? Especially if you use them responsibly.
Absolutely. Credit cards aren't inherently bad. They can actually offer some valuable advantages if you know how to use them strategically.
All right, so let's shift gears a bit and talk about how to use credit cards to our advantage. What are some of the key benefits?
One of the biggest benefits is building a positive credit history when you use your credit card responsibly, meaning you make your payments on time and keep your balances low. You're essentially building a good credit score.
So it's like a financial track record that shows lenders you're trustworthy.
Exactly. And having a good credit score is crucial for things like getting a loan, buying a house, even renting an apartment. It can also help you get lower interest rates, which can save you a lot of money in the long run.
That makes sense.
Yeah.
A good credit score opens doors to better financial opportunities.
Absolutely. Another benefit is the rewards programs we talked about earlier. While they can be tempting, they can also be a great perk if you use them wisely. Choose a card that aligns with your spending habits, like one that offers cash back on groceries, or travel miles if you travel frequently.
So you can actually benefit from those rewards, as long as you're paying your balance in full and not letting the points dictate your spending.
Exactly. And another advantage is fraud protection. Most credit cards offer strong security features and zero liability policies, meaning you're not responsible for unauthorized charges.
That's a huge relief, especially with all the online scams and data breaches happening these days.
It's a valuable layer of protection. And finally, credit cards can be a lifesaver in emergencies if you have an unexpected car repair or medical bill. Having access to credit can help you cover those costs without having to dip into your savings.
So it's like a safety net in those tough situations.
Exactly. But it's important to remember that this is a short-term solution, and you should aim to pay off that emergency spending as quickly as possible to avoid accumulating debt.
Okay, so we've covered a lot of ground here. We've talked about the potential pitfalls of credit cards, the psychological tricks banks use, and also some of the benefits of using them responsibly. What's the biggest takeaway you want listeners to walk away with?
The key is to remember that credit cards are tools. They can be incredibly useful if used correctly, but they can also be dangerous if you're not careful. It all comes down to understanding how they work, being aware of the potential traps, and using them strategically to benefit your financial well-being.
All right, so we've really dug deep into the world of credit cards, the good, the bad, and the sneaky.
And hopefully you're starting to see that being informed is the most important thing when it comes to managing your credit.
Absolutely. We've talked about those tricky fees, psychology that can lead to overspending, and the importance of reading those credit card agreements carefully, even if they feel like they're written in a different language.
Because knowledge is power, especially when it comes to your finances.
So true. Now, before we wrap things up, I want to circle back to that simple but powerful piece of advice you mentioned earlier. Always leave home without it.
It might seem like a small thing, but leaving your credit card at home can be a game changer when it comes to curbing impulse purchases and sticking to your budget.
It's like taking a break from that constant temptation to swipe.
Exactly. And even if you do use your credit card, make sure you're doing it strategically. Choose a card that fits your needs and offers rewards that actually benefit you. Make sure you're paying your balance in full every month to avoid those interest charges, and don't fall into that minimum payment trap.
It's all about taking control of your finances and using credit cards as tools to build a better financial future.
Well said. And remember, if you're ever feeling overwhelmed or struggling with credit card debt, you're not alone. There are resources available, like credit counseling agencies, that can help you get back on track.
That's a really important point. Don't be afraid to reach out for help if you need it.
So as we wrap up this deep dive, I want to leave you with one final thought. If you're already using a credit card, what's one small change you could make today to use it more responsibly?
Maybe set up automatic payments so you never miss a due date and avoid those late fees.
That's a great one. Or maybe create a budget and track your credit card spending more closely so you know exactly where your money is going.
Or maybe even try leaving your credit card at home for a week, just to see how it impacts your spending habits.
Those are all excellent ideas. Remember, even small changes can make a big difference over time. It's all about taking those first steps towards financial empowerment.
Well said. And that wraps up this episode of Podcast Infinity. Remember, brain builders, give your brain a dose, grow smarter.
And until next time, stay curious and keep those brains buzzing.
This is Podcast Infinity signing off.